Vietnam's economic landscape in 2025 and the outlook for 2026, a new foundation, new challenges. The global economy in 2025 demonstrated greater resilience than previously anticipated in the face of geopolitical shocks and new U.S. tariff pressures. Growth momentum has been supported by rising investment in artificial intelligence, data, and innovation, alongside flexible fiscal and monetary policy management across many countries. Global growth is estimated at 2.7 to 3.2% in 2025 and projected at 2.6 to 3.1% in 2026, about 0.2 to 0.3 percentage points lower than in 2023-2024, with widening divergence between advanced and emerging economies. Global trade is forecast to expand by only 2.3% in 2026, down from 3.6% in 2025. A notable bright spot is easing inflation, expected to decline from 4.2% to 3.6%. Creating room for interest rate cuts. Against this backdrop, Vietnam's economy in 2025 has been widely described as impressive, laying the groundwork for an ambitious target of double-digit average growth during 2026-2030. GDP expanded by 8.02%, placing Vietnam among the 21 economies recognized for strong growth and macroeconomic stability. Notably, growth accelerated quarter by quarter, signaling a sustained recovery. On the supply side, industry and construction grew by 8.95%, contributing 3.37 percentage points to overall GDP growth. Manufacturing and processing rose by 9.97%, the highest rate in the 2019-2025 period. Services expanded by 8.62%, making the largest contribution at 3.69 percentage points. Agriculture, forestry, and fisheries increased by 3.78%, continuing to serve as a stabilizing pillar despite severe weather disruptions. The growth structure has shifted in a more positive direction toward industrialization and higher value services. On the demand side, final consumption rose by 7.95%, accounting for 61% of total growth. Retail sales increased by 9.2%, or 6.7% in real terms. International arrivals reached a record 21.2 million, up 20.4% year over year. E-commerce grew by around 20%, reaching approximately $32 billion in scale. Total social investment climbed 12.1%, the strongest in 8 years. Public investment surged 26.6%, contributing 1.9 percentage points to GDP growth, while dispersed FDI reached $27.62 billion, up 9%. Total merchandise trade hit $930 billion, including services. The figure exceeded $1 trillion. The combined goods and services trade surplus stood at $9.8 billion. The economy's size reached an estimated $514 billion, ranking 32nd globally. GDP per capita rose to $5,026, officially placing Vietnam in the upper middle income category. Labor productivity increased by 6.83%, with total factor productivity contributing 47% to growth. Average monthly income reached approximately $350, while the multidimensional poverty rate fell to 1.3%. Macroeconomic fundamentals remained broadly stable. Average CPI rose by 3.31%, with core inflation at 3.21%. Interest rates and exchange rates were managed flexibly. The VN index surged 40.9%, and both the corporate bond and real estate markets showed signs of recovery. Public debt stood at an estimated 36% of GDP, and the fiscal deficit at 3.6%, well within statutory limits. State budget revenue rose 29.7%, exceeding projections by 34.7%, while public investment disbursement reached approximately $34 billion, the highest in 8 years. The number of newly established businesses exceeded market exits by a factor of 1.3, with more than 3,200 household businesses converting into enterprises, bringing the total number of operating firms to over 1 million. Vietnam's external relations and global integration continued to deepen, strengthening its international standing and diversifying markets and partnerships. Several international rankings improved, including innovation capacity, startup ecosystem development, national credit ratings, and happiness indices. Nonetheless, significant challenges persist. Slower global growth and U.S. tariff policies have weighed on Vietnam's exports. Since September 2025, export momentum has softened. Domestic enterprises accounted for only 22.7% of total exports and saw a 6.1% decline, while the FDI sector, representing 77.3% of exports, grew by 26.1%. Export markets remain concentrated, with the US accounting for 32.2% of total export turnover. Meanwhile, imports from China increased sharply, heightening supply chain vulnerabilities. Private investment rose by 8.4%, but remains well below pre-pandemic levels, while newly registered FDI fell by 12.2%. Average labor productivity growth for 2021-2025 was about 5%, short of the 6.5% annual target. Although the incremental capital output ratio has improved, it remains relatively high. The digital economy accounts for roughly 14% of GDP, below the 20% target. The USD-VND exchange rate rose 3.1% in 2025 amid foreign currency supply pressures and capital account deficits, while the domestic global gold price gap remains wide. Severe natural disasters caused damages estimated at nearly 4.2 billion USD, shaving approximately 0.8 percentage points off GDP. Looking ahead to 2026, policy direction must remain prudent yet proactive. First, effective implementation of enacted laws and resolutions is essential to unlock stalled projects and further improve the business climate. Second, traditional growth drivers must be revitalized, while new drivers centered on science and technology, digital transformation, green transition, and strategic industries are accelerated. Third, macroeconomic stability should remain a priority, with fiscal policy playing a leading role and monetary policy providing flexible support while containing financial and real estate risks and advancing capital market development. Finally, deeper economic restructuring is required to enhance investment efficiency, reform state-owned enterprises and weak financial institutions, and strengthen resilience against external shocks. Overall, 2025 established a solid institutional and macroeconomic foundation while reinforcing market confidence. If structural bottlenecks are effectively addressed and opportunities from supply chain diversification, digitalization, and green transformation are fully leveraged, Vietnam is well positioned to move onto a higher and more sustainable growth trajectory in the years ahead.